Yeah, these are preliminary results from Ford. We'll get the final ones on April 28th. Sarah, it's hard to say that people aren't really focused on the first quarter, but in this case, that's not what's moving the stock. Yeah, they're going to see revenue down about 15% in the first quarter. What people are focused on, liquidity level, which means what's happening now all the way through the third quarter. And today, Ford gave us some indication of where they stand. As of April 9th, last Thursday, they had $30 billion in cash on hand. They said, look, even if sales don't increase, if we don't build more vehicles, that's enough to get us at least through the third quarter. And oh, by the way, more loans are possible. So it's the possibility of them taking on greater debt that has people saying, well, what's the cash burn going to be? RBC is out with an estimate saying they'll be burning through likely $1.2 billion a week. Now, that's just an estimate from RBC, but the bottom line is this, guys. This draws the focus even more intensely on where the automakers are in terms of cash position and how quickly they're going to be burning through that cash, especially if they're not going to be ramping up production maybe until the middle of May, end of May. Who knows? It all depends on how quickly different areas of the country come back online.
Yeah, when you start to talk about cash positions and survival mode and worst case scenarios, not a great reminder. How are the rest of the automakers faring relative to Ford?
They've got pretty decent cash positions. But again, this is such an intense business when it comes to capital outlays, Sarah, that it doesn't take long to say, OK, are these guys in good shape through the second quarter? Yes. Third quarter? Yes. Fourth quarter? If things are still really rough, then it's a totally different discussion.